You guys can see my screen, right? Okay. So this is actually the final part of the strategy. This is knowing how to take profits using liquidity. Knowing how to set your take profits for this strategy using liquidity. So there are actually different kinds of liquidity. One, there's the trend line liquidity. Two, there's the equal high, the equal low liquidity. There's long week liquidity. So and also there's the inducements, obviously, as you all know, it's also liquidity. So these are the types of liquidity there is in the market. So how do you now take profits using kinds of liquidity? Now, for every movement the market does, there's a particular trend or there's a particular pattern market follows to approach any kind of fixed point in price. So let's say, for example, this is a zone you're looking to take your buy from this trade, like there was a break of structural inducement, and you're looking to take your buy from this trade. So this is your POI, and let's assume that price was here, price have not gotten to this POI, and while price is approaching this POI, it was making a series of lower highs and lower lows, lower highs, lower lows, lower highs, and lower lows. Now, like I mentioned, there are types of liquidity, and one of them is trend line liquidity, uptrend and downtrend. What does this mean? It means for every trend there is, there's liquidity being accumulated on that side, on the opposite side of this trend. So if market is on an uptrend, making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. On this downside, there's liquidity being accumulated here. And one thing about liquidity is the market must eventually take out liquidity. Market will eventually take out liquidity. So if it's an uptrend, just know there's liquidity being accumulated down here, down here. There's liquidity being accumulated down here. And if it's a downtrend, there's liquidity being accumulated on the upside. So if it's a downtrend, lower highs and lower lows, lower highs, and there's liquidity being accumulated here. So that's these are the types of liquidity. So the trend line liquidity, the uptrend and the downtrend. So knowing the pattern market is following at that particular moment is approaching your point of interest, it will tell you where to exactly to take your profit. So, like I said, once there's a trend, there's liquidity being accumulated on the opposite side of it. So, market was in a downtrend here, making a series of lower highs and lower lows. Lower, why approaching this my point of interest that I kept for a buy? So, what does it mean? It means that throughout this place on this upside here lays what trend line liquidity here. It means that from here down here lays trend line liquidity. It means that there's liquidity on this upside. And once market takes out one side of liquidity, we're going to take out the other one. This inducement liquidity was taken out and market triggered the point of interest here for a buy. So my take profit would now be to target and clear the entire trend line liquidity. From here, from where it began from, lower highs and lower lows, lower highs and lower lows. So there's trend line liquidity laying here. So once I've taken my trade and I want to take my take profit will target to clear that entire liquidity zone in the market. That was why my TP for this trade was right here. same as here. So same here. I think here. So this is my POI that I was looking for a buy here in the market. And before price approached that point of interest, what was price doing? It was making a series of lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. So this entire lower highs and lower lows movement here, what does it mean? It means there's liquidity being accumulated on this upside. So if I'm to take my profit, my initial take profit, if I take my entry from here, my TP would target to clear this entire trend line liquidity here. That was why when price got here, it now made the first reversal step before started going up again. So liquidity is what fuels the market. If market takes out liquidity from this end, it's going to target to take liquidity on the other side too. So so if market takes out liquidity from one point of from one point of the market, let's say buy side, it takes out liquidity on this side, it's ready to take out liquidity on the other side. That is the thing with trendline liquidity. So trendline liquidity, if it's an uptrend, there's liquidity being accumulated on the downside. If it's a downtrend, there's liquidity being accumulated on the upside. For example, you can see this is a trend line. You can see higher highs and higher lows, higher highs and higher lows, higher highs. So this is where market shifted structure and started going down. What the price do? This is trend line liquidity here. So since there's liquidity here, if I'm taking my trade from this whatever zone that I'm taking the trade from, my take profit targets the trend line liquidity. Wherever the thing began from, that was my take profit to be. So my TP will now be here first. I think that this is what the transition line will start. My TP will be here. This is where I will target to take my take profit. My initial take profit on the trade will be here, clearing this entire trend line liquidity. And most people will now start buying. You now see people do something like this. There's a structural shift, there's inducements. They will not be buying from this other block, or they'll buy from this. You take a loss. Why? Because market has officially shifted structure to the downside. And for the market to now take profit, it has to clear this entire trend line liquidity first before you can now start looking for reversals. So if liquidity has not been taken out, looking for reversals in the market is pointless. So that is one type of liquidity. Second one is equal highs and equal lows liquidity. What people call equal highs, what most people call double top and double bottom is what equal highs and equal lows is. For example, you can see market do something like this. The same market do something like this. Then maybe do a bit of something movement like this. Then go here and still make an equal high here. See, if this price market, so here is your equal high in the market. This equal high is actually liquidity. Market will eventually come out and take this equal high. So if this was what formed in the market right before your point of interest triggered, let's just give an example that here is your point of interest for a buy. If you take this trade, you take profit, should target that equal high because that is where liquidity is resting. So if it's for trend lines, if as market approaching your entry, what is it market is majority of the time market approaches entries trend. All the trades are taking majority of the time market approaches those entries with trend lines. So that's why it's easy to spot the lines. Once market is approaching a point of interest using trend line, that entire trend line liquidity is what you're going to target market profit. Pay attention here. There's trend line liquidity here. Market was on an uptrend, making a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs. Then eventually when market started selling, this is trend line liquidity. It means that liquidity lays under this entire zone. So anybody taking a buy here will be taken out. Taking a buy here will be taken out. Taking a buy here will be taken out. Markets will eventually sweep this entire trend line liquidity. It was after market swept this entire trend line liquidity that it now started what? Reversing. So anybody taking a buy. So once market has shifted structure the other side or the opposite direction or broken structure, you have to make sure that liquidity has been taken out from that end that is going to before you can now start looking for reversal. That's how to properly trade the reversal. The market will take out liquidity before going to take out another liquidity on another side. And if liquidity has not been taken out on both ends, there's really not much movement in the market. So that's how you know how to take your profits. Before market approaches any point of interest, it approaches with a pattern. Majority of the times, it's with a trend pattern. If market is approaching a buy zone, it will approach with maybe a downtrend. You can see lower highs and lower lows, lower highs and lower lows. That lower highs and lower lows that's coming in the market is liquidity being built up. That liquidity being built up means that if market should trigger a reversal zone to clear that entire trend line. So that will tell you where you will take your profit from. Same thing as market having an equal high or an equal low. Whenever there's an equal high in the market or an equal low, it means there's liquidity laying there. Equal high or equal lows in the market means liquidity. It means that eventually the price will come out and take out that zone in the market. I think I can spot an equal high here. So I think I can spot an equal high here. So this equal high right here is, most people will say, oh, this is a double bottom, or this is a double top actually, and then they will start selling from here. This right here is liquidity, and market has to take out that liquidity first. So if you are taking a buy after this equal high was formed, and if this equal high was formed, I would not be looking for a sell. I would know that market, any movement that market makes is to come out and take out this equal high versus liquidity. So that's why the person that now takes a buy from this zone, you take a buy from here, you now target market to clear these equal highs before market can eventually start reversing. So liquidity is what fuels the market. If liquidity has not been taken out from one end, don't expect a reversal. So for people that were taking sell buys on this trade, you see this kind of movement. Market, because initially it's an uptrend now, higher highs and higher lows, higher highs and higher high. The market now broke this trend. As this trend line was broken, the market started reversing. This market would not reverse until the entire trend line liquidity here has been taken out. Same as this is a downtrend, so there's liquidity on this side. Most people will be selling this trade from here, but there is still liquidity up here. And before market can make any reversal, it has to take out what? The trend line liquidity. That was why when you guys, someone posted a sell on this gold, I was one that said it's bullish. When from here now to buy from here and take profit. If not, the person would have taken a loss because there's trend line liquidity, and I saw what I just spotted it. I also looked at the chart. I knew trend line liquidity has not been taken out yet, and that was why I took my trade. That was why I said it's bullish. So you just need to understand some basic things in the market to tell you that this setup will hold or this setup will not hold. If I look at someone's chart and they're trying to take a buy and I notice that liquidity has not been taken out in the market, I will tell them it's going to hit stop loss and they will hit stop loss. So understanding liquidity, understand that liquidity actually fuels the market, will tell you where you should be taking a trade from. Anybody taking a sell from this other block will take stop loss. Anybody taking a sell from this other block will hit stop loss. Anybody take why? Because the trend line liquidity here has not been taken out. Same as people looking for buys from this other block, here, they'll be taken out after this structure shift. They'll be taken out. People looking for buys from this other block here, will be taken out. People looking for buys from, they will keep taking you out until what? Until market clears the entire trend line. That's why people will not ask me if they have other block here, other block here, other block here, which one would they use? Provided that structure has not shifted, use the current one. But if market has shifted structure that is deviating from this trend, being an uptrend, this one you're trying to use, it will hit stop loss. This one will hit stop loss. This one will hit stop loss. Markets will continue hitting your stop loss until that entire trend line liquidity has been swept. Once that market has left that trend line liquidity, it will now trigger a point of interest that is closest to that trend line liquidity. After triggering it, that's when you can now start seeing signs of a reversal in the market. Hope I'm well understood. So after equal highs and equal lows liquidity, that's what we call long week liquidity. Now, long week liquidity happens Which is I think most of the time when there's a too much volatility in the market. So let's say during news or something, and then news makes a market movement and there's like a huge spike in the market for price eventually maybe reverses up like this. Then there's a spike in the market and price now does something like this back up and then starts moving. So this spike in the market is actually liquidity. It happened on GJ that I was holding a buy. That long week liquidity was my take profit. I held that buy. Like I kept buying and I kept buying because I knew that long week was my target. Because why? There's liquidity laying there, and I knew that price is not yet taking out that liquidity. So I kept buying. Think, let me see if I can get a visual for it. It's on 4 hours time frame on GJ. Why? 4 hours time. Yeah. When price was still here, price was so this was the long week. This was the long week here. So knowing that long week represents liquidity, I was on a buy here and my target was to clear this long week liquidity. So I held my buy from this position and market cable, even after the price still took out this. And immediately after price took it out, that was when I now posted GG has taken out liquidity, and now I'm looking for sales that people were trying to buy. I think this was last week. So after these 4 hours, because I told you, only after market takes out liquidity, then you can start giving signs for a reversal. So if you notice, this was the liquidity here, and this was the candle that took out that trend line liquidity, that took out that long week liquidity, was this candle. After taking it out, that was when sales now came in the market. So there is trend line liquidity that is uptrend and downtrend. There's equal highs and lows liquidity. There's long week liquidity, and then there's the one you people know, inducement. Inducement is basically the first pullback that markets makes after a structure shift or structure. So, for example, here is your inducement. If you are taking a sell from here in the market, your targets will be what? Your targets will be this inducement right here for your take profit, because you know the market will take out that inducement to trigger your main point of interest before eventually reversing. So for you to take profit, it depends on the pattern that market is forming while you're taking your trade. If it's a downtrend liquidity, you know that your take profit will take out the entire downtrend liquidity. If market is on an uptrend and is making higher highs and higher lows while approaching your sell entry, you know that your take profits will clear that entire trend line liquidity. If markets made a very long week on the downside before going up to trigger your sell entry, your take profits will go and clear that long week liquidity. If there is an inducement that you know the market will come and still go and trigger your point of interest, and you catch a sell, and there's an inducement for a buy on the downside, you catch a sell, your sell take profit at that inducement level, because you know it's liquidity that has to be taken out for market to now start reversing. That's basically it for this topic. So if you have a question, you can ask me. I'm having no questions. Can you hear me? Can you hear me? So please, if you have a question regarding this liquidity that I just taught, just ask me. I think it's actually very, very clear. There are different types of liquidity. Just get this down. Trend line liquidity, that's uptrend and downtrend. So for every pattern that market uses to approach entry, will tell you where your take profit should be. I want to look at trades that are taken. Let's see. So this trade that I took here on GJ, pay attention to what happened. As market is approaching this my breaker as entry, what was it doing? Higher highs, higher lows, higher highs, higher lows. So what did I know? I knew that there was trend line liquidity on the bottom of this zone. Really, my price triggered my sell entry. What did I do? My target would be to clear that entire trend line, and that was what I did. Same thing as so this was when I actually had the analysis because I noticed the trend. Higher highs, higher lows, higher highs, higher lows. I knew that if I take a trade, price will clear this trend line liquidity. So this was when the entry triggered and actually price cleared that and tried. Same thing as let me look for another setup. But it's just liquidity is what you use for your take profits. So like I said, trend line liquidity. Majority of the time, price approaches an entry or either a sell or a buy. The pattern market uses to approach our entry is mostly trend like, except in a situation where there's a long, like there's news and there was news that triggered the entry. There's also going to be another pattern that market is going to use to approach entry. Also, another thing, when you want to, another place to take your take profits using valid point of interest. For example, there's an order like let's say you take a trade now, a buy for example, and there's an order block up here. You can before you can consider using that other block as a take profit, you have to check if that other block fits into the criteria of picking a proper point of interest. So first thing you check is does this other block did it trigger a shift in market structure? If it does, you check if it has liquidity. If it does, you check if it's unmitigated. So if it has all these criteria and you take your profit and take a trade from here, expecting to take your profit on the upside, you look at a valid point of interest that may trigger a reversal in the market. That's where you put your take profit. So that's just basically it. This is the last topic for the class. I think I will see also another class and do a summary. Like starting from the first class, second class, and third class, everything in one class, just summarize it. But this take profit is actually very, very simple. It's the easiest part of the strategy. Knowing where to put your take profit, draw on liquidity. So how you take your profit, draw on liquidity. If market approaches your buy entry with a downtrend, your take profit should clear that entire trend line liquidity. If market approaches your sell entry with an uptrend, your take profit should clear that entire trend line liquidity. If it was a long week that market made before approaching your buy entry, your take profit should clear that long week. If it's a long week that market made before approaching your sell entry, your take profit should clear that entire long week. So you understand better now. My buy setup on gold that I had, these three consecutive buys that I had on gold. Uh, okay, where is it safe? The buy setup I had on gold. Okay, from here. So the buy setup I had on gold. So the first setup actually was is very simple. I saw this structure break of structure here, so I marked out this thing as my inducement right here. This is my inducement. Or I marked it down from here, and I just simply used this other block here to get into the trade. This other block here. So what pushed the market down here is simply is because of news, but my stop loss did not get it. That was how I was able to get the first entry. Just break of structure, inducement, and this other block right here. Then for the second trade, it's simple. There's still another break of structure here. There's inducement. And then for the rules of picking a point of interest, if the body of the other block is longer than the wick of the other block, you pick your entry from the wick of the other block. That's how I got the second entry. For this third entry, it is a breaker block on 3 minutes time frame, I think. This third entry, yeah. The third entry. So there was also another structure shift here, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower. The market shifted and broke this last high. After that, there was this inducement that was formed. and then I used this breaker block here to get my entry for the buy. So that was how I got these three consecutive buys. First one, second one, and then this third one. I don't. Okay, this is the first one, and let me see if I have the second one. I don't know if I still have the screenshot. But this was the first buy on gold. So the first buy on gold. So this was the first buy. Then the second buy, I don't think I analyzed the second buy. I was not active when the second buy hit, but I think it was the third buy that I caught, which is this. So this was the third buy on gold. So this was that first one that I showed, and this one I was sleeping when this one triggered. Then I took this one. So that was just it. So for my take profit on this trend line liquidity has to be cleared. My take profit on this trend line liquidity also has to be cleared. But I was targeting extra piece because I knew that gold was bullish. Okay. So that's just it. That's how I was able to guide the trade. Lucy is asking me if there are two breaker blocks. Pick the one that's closest to liquidity now. So that's basically it for this thing. The major things about the strategy was already taught. Picking a point at the end, liquidity and everything. This is just for your take profit. So just get down these different types of liquidity. Trend line liquidity, that's uptrend and downtrend. Equal highs and equal lows liquidity. Your long weeks liquidity, and then your inducement inducement. Another way you can take profit is using valid point of interest. So if you're taking a buy from here and you want to take profit, you take profit as a point of interest that may cause a reversal for a sell. So if this is another block here and there's another block here for a buy, you take a buy, and this other block for a sell is actually valid to cause a reversal and keep your take profit to that block. Once price gets to that other block and triggers your TP, you will start reversing. So these are the types of. So that's basically it. Forest Prince, your analysis was not correct now. I just knew you hit SL. You is not correct. He analyzed very well. Your analysis was not correct. That's just so I'll send the recording to the class. Any questions regarding what I thought just ask me immediately. So peace out. I think I'll host another class again. I'll pick a date just to summarize everything that I've taught. I'll put it together in one video, like in one class. So that's just